1, 2, and good afternoon. It is 3 o'clock. It's actually 3:10. It is Saturday, May 30th, and we're going to talk about options. I'm going to give you an idea of the plan for Monday, what support and resistance lines are, what the option chain is, how options work, how I use options, and how we're going to trade American Airlines on Monday. So the plan is, I believe, solely me. This is for entertainment and educational purposes only. So again, solely me. Don't make my trades. You will lose money. We're going to try to get a position in American Airline. I think it's going to move at the very least $3 by Friday. I really hope it hits 15. I hope this stock jumps up to $15 by Friday. It's kind of improbable that it will. I mean, we have 5 days for that to happen. We might look at a contract 2 weeks from now and get that for there, but who knows? Anyway, so let's talk about support and resistance lines. All right, so just before the Heineken started its terrible situation on people and things and other stuff too, American Airlines was trading up here at $30.50. We had bad news bears. We had this huge sell-off, and we had a bounce. So almost all the tech industry, almost the entire stock market had this bounce. So we'll call this the Heineken bounce. All right. All of tech. 90% of tech. 85% of tech. Let's stick with 85%. 85% of tech has bounced back up to the Heineken bounce. Theirs was a little bit higher. Theirs was significantly higher than this one, but this is low because it's travel stock. Travel stocks got hurt the worst. All right, travel in general got hurt the worst because of the Heineken. So we're looking for this to get back up here to this bounce. So $17. Really feel like this is going to hit $17. Why is this important, and why do we have a line here? All right, so this is a resistance line. This resistance line could turn into a support line. So yesterday, showing you, I had a blue line on my chart. That blue line was a resistance / support line. I look for these lines, so you can see here the stock hit 17, took a dip, hit 17, took a dip, hit 17, took a dip. All right, so this is resistance, resistance, resistance. Whenever the stock makes it past resistance, hits that line, turns that line into support, as in it can't get below it, you typically start having a pretty serious uptrend from there. Facebook did it super hard. It was crazy. They moved like $30 in 2 days. It was pretty wild. But American Airlines, they're going to do the same thing. Are they going to do it right now? No. They're going to do it tomorrow? God, that would be sweet. They're going to do it in a month from now? I don't know. This is all speculation right now. But we do want to see a small move, so we want to look for a support line. So support lines are where the stock hits a low and bounces off that low, hits that same low, and bounces off of it, hits the same low, and continues to bounce. So right here, support, 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 and we haven't gotten back down to the support. So it looks like this may have been the low, and we're not going to get any lower than this. We have resistance lines right here at 1360, 1350, where we hit support, resistance, and pulled back. Hit resistance and pulled back. Hit resistance, pulled back, and bounced off of these support lines every time. We're looking for a specific area to try and bounce off of again, and we're going to try and find a price target based on those bounces. So earlier, like I said, I think we're going to hit 1350. I think we might hit this resistance line again. What we need to happen is to break this resistance line, bounce off of it and turn it into a support line before we'll actually hit $15. So this is the 180-day 4-hour chart. We're going to switch to a smaller chart so we can look at the intraday. Look at a 5-day, 5 minutes. All right, so these are my smaller lines that I follow for weekly, bi-weekly options contracts. So we got to make a plan. If you're not making a plan, you're planning to fail. And this is one of the most important things that you should really embed in your mind. If you hate your job and you want to do something different and you're not making a plan to do something different, you will never leave that job. You will always hate it and you will be miserable forever. So make a plan, execute your plan, and modify your plan if it's not going to plan. But make a plan. So we're going to make a plan here. We created a support line, we created a resistance line, and we have an objective line. That's what we want to get to. So we're in between our support and resistance lines right now. I believe over the weekend we're going to get up here to 11.17. I feel like we're going to break past this because the state, everybody and everything is opening back up and people are getting to do fun things and travel, and this is going to create some bullish sentiment that people are going to want to reinvest into the travel market. So I feel like over the weekend, as long as we don't get any more crazy news, we should hit $11. We should break this resistance line, bounce off of it, and get a run all the way up here to 12.50. Okay, so now that we have an idea of the direction we're going to go, we're going to look at the option chain. The option chain. An option chain has what's called calls, and it has puts. A call basically means that we think that the stock is going to go up. A put means we think the stock is going to go down. So calls, puts, option chain, options. So what is an option? An option is a contract. It's also kind of like a coupon. So I'll try to break this down in coupon analogy. So this stock price right now is $10.75. And this contract, which is highlighted right now, is $10.50. So there's a term, several terms, but the term we're going to break down first is in the money. So $10.50 call is below $10.75. So right now, if the stock price is at $10.75 and a contract is $10.50, that's in the money. It's 25 cents in the money, which means that your contract has value, has liquidable value, because it is in the money. It is below the asking price. We get out of the money, let's say $11. So this $11 contract is out of the money because we're 25 cents away from $11. This one's $11.50, so this would be 75 cents away or out of the money. So contracts hold value after expiration, on the day of expiration, if they are in the money, which means you can execute the option. So what is executing an option? This coupon allows you to purchase 100 shares at the coupon price. So let's say we bought this coupon at $10.50. This coupon does not have to execute until Friday, June 5th, and the stock price happens to go up. Let's say it runs up to $15. This coupon guarantees our spot here at $10.50. So if the stock price runs up to $10.50 and Friday we decide that we actually want to purchase the 100 shares, we have the right to buy those shares at $10.50, and it's 100 shares. So we would spend $1,050 to get those 100 shares with this coupon. Now the downside to this, if we buy this coupon at $10.50 and we pay between $53 and $59 for this coupon, and the stock price goes down, and let's say it goes down to $8.50, it would become out of the money. And this really wouldn't have any value because you wouldn't want to buy the shares at $10.50 if they're at $8 or $8.50. We would just buy them at $8.50. And we would just let this money go. We'd just lose the money and buy it cheaper. Or we could spend the money and it goes up and we'll buy it cheaper. So this is how this works. So we got if we get this contract, we got 5 days before this contract expires. If we buy this contract $10.50 at $59, and all of a sudden American Airlines just starts going up really, really fast, the value of this contract is going to go up because, well, we'll be able to buy this 100 shares at $10.50, even if the stock price is at $15. So the deeper in the money our contract goes, the more value it'll gain. So my intentions is to buy one of these $13.50 calls. I believe American Airlines is going to get to $13.50 before Friday. The cool part about this is if this somehow happens to get in the money, our $6 contract will turn into a $59 contract, potentially $60 contract. What is that? That sounds like 1,000% increase, only spending $6. Now, if we were to do that with the stock, we'd have to spend something like $322. It would have to go up, and this isn't a dollar, these are 50% increments, so this would have to go up to $13 for us to make the same $50. So we'd have to spend $300. The stock would have to get up to 13, so it would have to move 10.50s. So there's 1, 2, 3, 250. I'd have to move $2.50 for us to gain the same $60, which is crazy. I'd rather spend $6 to make 50 instead of $322 to make 50. Because worst case scenario when I buy this contract is it expires worthless. I lose $6. $6. That's it. I'm out $6. Take $6 for potential to get 60. Now you can buy several of these contracts. I mean, I don't know if there's a limit to how many contracts you could buy. We could get 10 of these, spend $60, and then if it gets into the money, then we have $60 times 10. That's $600 that we'll walk away with. If it goes against us, and we feel pretty strong that it's going against us and it doesn't happen very fast, this will lose $2 or $3. It could get all the way down to $1. Excuse me. Could get all the way down to $1, but then we could still get out with $10 out of the 60 that we spent. So that's just the power in contracts, and I like this potential amount of gain better than I like the stock. Now, the good thing about the stock, if we got $300 worth of stock, we could hold on to it maybe a month, 2 months, 3 months, and that $300 could turn into $600. But I want to try and make that money within a day. And so I trade options contracts. Now, there are contracts that get really expensive. So if we were to go look at like Tesla's contracts trade between $500 and $5,000, where these contracts are significantly less expensive, and based off of sentiment, we have a higher probability of making a win on this. Tesla is very irrational stock right now. It's probably going to keep going up, but I don't really want to risk a couple $1,000, although we would make a couple $1,000. But I don't want to make that kind of risk with the account that we have right now because we only have $180 to trade with. So I'm going to get into some other trades, but as far as sharing this stuff on Facebook and YouTube, I'm going to primarily stick to the WEBULL account because WEBULL is awesome and it works really good. And by the way, if you're interested in getting into WEBULL and trading for long term, short term, or options, I'll leave a link in the description. If you sign up and deposit some money, you and I will get a free stock. And it'll be ultra awesome, amazing, and exciting. So anyway, that's the play. That's one of the plays, but that's the play I plan on sharing. Monday, we're going to try and get into this American Airlines. I'm going to try and get this 1350 call, which this may change because over the weekend you can still trade after hours. So the stock price is going to go up or it's going to go down. So this value is probably going to be different by Monday. Depending on where the stock is, like I said, I feel like it's going to get above $11. This will get this closer to the money. So by Monday, this might actually be valued at $14. If it is away from it, then we'll buy it cheaper, or we'll buy another one of these contracts that's closer. We'll see. You'll just have to find out. Maybe I'll post it on Instagram. Maybe I'll do a live video on Instagram Monday morning before market opens, and at market open I'll show you making the trade. It takes me a little while to edit these videos, and I'm really not very good at doing live stuff, so maybe in the future we'll get there. If this actually gets a community and people are interested in what's going on here, they see the account growing, which it will, then maybe I'll start just doing this live, legit live every day. But anyway, I will explain more. We'll go into further detail on things. I'm just going to slowly work you into what I'm doing and what these things are called and what indicators to look at and use and what options go which ways. I will explain put options if I find a stock that I'm betting against that I think is going to go down. I mean, realistically, the whole market could go down tomorrow, but I really think this is going to go up, and I could be wrong. That's why this is for entertainment purposes only. I am not a financial advisor. Please don't make any of these trades.